There's nothing new under the sun in Bitcoin, as the war on information continues. Bill Maher once again goes on an ignorant and ill-informed rant about Bitcoin's energy use and gets an absolute smackdown ratio for his troubles. Today, I'm bringing receipts for why we are absolutely winning. From banks starting to custody Bitcoin, to BlackRock calling it a unique diversifier amidst global economic turmoil. We also look at new data that reinforces Bitcoin's shocking correlation with global liquidity, which of course is increasing right now. And finally, we look at a new paper out today showing how the network itself is protected by the First Amendment. You're not going to want to miss this massive dose of Bitcoin signal to drown out all the noise. Welcome to Pure Bitcoin Signal. I'm Hurley, Director of Content at Swan. Let's get into it. The first thing we got to get out of the way is Bill Maher, who once again spouted off ignorantly and incorrectly about Bitcoin's energy use on his show. He posted this clip to Twitter with the tweet, "The dirty little secret about crypto that no one talks about."
There's the other big secret about crypto that nobody talks about. This bugs me so much. We just had Bjorn talking about the environment. All the progress that we're making with green energy is being sucked away by crypto. Crypto uses 8% of total electricity. They're data centers, they're mining. There's nonsense of finding a number. I can't even go through the whole thing. It's so ridiculous what crypto really is.
That's why it's, of course, this is like Trump's final business just before the election. Of course he'd end up in crypto. It's a grifter's paradise.
It's comparable to putting 15.7 million additional gas-powered cars on the road. So as we take them off to go to electric, crypto eats it all up and goes the other way.
First of all, he's acting like this is some new critique about Bitcoin that no one but him is talking about. The fact is, Bitcoin proponents have been warding off criticisms like this since way back in 2019. So do us all a favor and get off your high horse, Bill. He quickly got schooled by Community Notes on Twitter, which stated the 8% of global electricity claim is factually incorrect. Bitcoin uses 145 terawatt hours per year, including renewables, which is only 0.49% of global electricity. Now, I'll give him a bit of a break because he's clearly reading off cue cards that his writers handed to him, but this is totally embarrassing for Bill, HBO, and the writers of the show. Maher also got totally annihilated and ratioed in the comments. Here are a few of my favorites. Anil is very on point with this one. Quote, "This nonsense. Guy who's never lived under dictatorship or hyperinflation." The irony that Maher, an upper-class entertainer with a show on HBO, doesn't see the value to humanity that Bitcoin brings, especially to the unbanked, those living under harsh dictatorships or crippling hyperinflation, isn't lost on Bitcoiners. Bitcoin as a medium of exchange is a bottom-up revolution, and the ones who will understand it and benefit from it the most are the ones that need it the most. Another great ratio comment was from Alan Farrington. Energy consumption is synonymous with human flourishing. And this one leads directly to my favorite, this one from Natalie Smolenski. People really don't have a theory of technology. They would have smeared Gutenberg's printing press for being, quote, bad for the environment because of all the paper used. In reality, its environmental impacts were negligible and its contribution to human knowledge and freedom incalculable. Increasing energy consumption and the technological leaps that it enables, like Bitcoin and the printing press before it, directly correlate to increasing human flourishing globally. To be honest, I'm really starting to get tired of this energy consumption debate, because it comes from the fundamentally flawed assumption that all energy use is bad, when in reality, there is nothing further from the truth. The universe is made up of energy. We don't create or consume it. We harness and transfer it to the benefit of humanity. The fact that Bill clearly doesn't understand the benefits Bitcoin offers to humanity means his opinions on whether or not it should use energy or not is meaningless. The free market of energy globally is clearly showing the utility of the Bitcoin network. So it's up to you to convince the free market that it's a waste of energy. Good luck with that. So now that we've put Bill Maher and his noise to bed, let's talk about where the real signal is coming from in Bitcoin. Continuing from yesterday's video about BNY Mellon receiving a special exemption from the SEC's SAB 121 rules, Bloomberg Crypto reported yesterday that they are indeed planning to move ahead with plans to provide custody for Bitcoin ETF issuers. It is extremely unlikely that this will be the only bank to receive this kind of treatment, and the game theory of big institutional banks custodying Bitcoin is coming to fruition at light speed. Bloomberg Crypto also had BlackRock's head of digital assets, Robbie Mitchnick, on to discuss the investing thesis for Bitcoin, and he expanded on the incredibly high signal report they released last week.
How
hard is the sell when you think about the retail investor base that can get into this? If you're trying to tell them it's digital gold, yet the volatility is still so high, and many people don't understand exactly what it is at the end of the day. Is it something that will eventually be used as more payment methods moving forward across different parts of the world? Is this something that you hold and never sell, right? How do you then make that case to a generation of people who have not gotten into this asset?
Sure. Well, when you think about Bitcoin, we think of it primarily as an emerging global monetary alternative, right? It is a scarce, global, decentralized, non-sovereign asset. And it is an asset which has no country-specific risk, has no traditional counterparty risk. So these are interesting properties when you think of it from an investment perspective, particularly in a world where there's growing concerns over, money printing, currency debasement risks, political, fiscal, sustainability challenges in the US or elsewhere. And so that resonates, frankly, with a lot of investors. It goes back to what we talked about earlier with the risk on piece. It confuses investors when people talk about it as risk on, because based on the properties that I just described, you would think of it as risk off. And that's where I think
it has a marketing problem.
So you could say that. And so, the reality is there's probably 2 or 3 things a year that happen typically that actually impact the fundamental value of Bitcoin. This year, I would argue there's been 4, but that makes it hard to write daily stories, right? And so you see this instinct to kind of point to whatever's happening in equities or unemployment or jobs numbers or manufacturing, which really has no connection to Bitcoin.
I just want to say how incredible it is to hear someone from the biggest asset management giant in BlackRock talking about Bitcoin in this way. BlackRock is pushing arguments straight from the pages of the Bitcoin Standard and Lynn Alden's Broken Money. And if you missed the BlackRock report from last week on Bitcoin being a unique diversifier amidst global economic turmoil, the link is in the description. Another high signal report that dropped yesterday was from the dynamic duo of Lynn Alden and Sam Callahan, which goes in depth on Bitcoin's correlation to global money creation. You'll find this full report linked in the description as well. I highly recommend you check out the whole thing. It's amazing. There's tons of great data and charts in there, my favorite of which shows that the Bitcoin price moves in the direction of global liquidity 83% of the time, more than any other asset. And of course, as we covered in yesterday's video, with China's new stimulus plan, global liquidity is trending up right in time for the US election cycle in the upcoming Bitcoin bull run. Although, of course, it's important to remember that there will be volatility along the way, the time may be running out to get on this rocket ship before it really takes off. October is less than a week away. All signs are pointing to an absolutely explosive move in the Bitcoin price, and it might be imminent. As we get close to finishing one of the best performing Septembers in Bitcoin's history, and we prepare for October, Moonvember, and Bullcember, let's talk about the case for 6-figure Bitcoin by Christmas. 6 months of price consolidation, first higher high daily close since March, China unveiling their biggest stimulus package since COVID, imminent aggressive rate cuts from the Fed, ETF flows increasing, our first price discovery with ETF Capital Unlock, and over $1 billion in shorts on the verge of being liquidated. Is the God candle finally upon us?
Pump it up, don't you know? Pump it up. You got to pump it up, don't you know? Pump it up. You got to pump it up.
Can you feel that? The vibes are off the charts in Bitcoin land, as the price is looking ready to absolutely take off. First, we're just a few days away from closing out the best September in Bitcoin's history. As you can see from this chart, September is by far the worst month historically for the Bitcoin price. But not this time.
All your models are destroyed, completely devastated. Bitcoin goes to the moon.
Now, I'm not much of a chart boy. I don't draw lines and ascribe Fibonacci sequences to predict markets. But even when I look at the Bitcoin chart right now, I get goosebumps. After nearly 7 months of price consolidation where we saw a steady downtrend and lower highs, we have finally broken out of that pattern with our first higher high daily close since March. Sometimes you can just feel it in your bones, and now is one of those times. In previous bull markets, the real fireworks start when we surpass previous all-time highs. So you might be asking, why haven't we gone parabolic yet? We surpassed the previous all-time high of 69K from 2021 earlier this year when we touched 73K in mid-March. The answer to this question lies in the inflation-adjusted price. As everyone knows, we had record inflation between 2021 and today. And even if you go by official inflation numbers, which many argue is on the low side of real inflation, you see we have not hit the all-time high yet. The CPI inflation calculator shows that all-time high number as $78,000 today. So there is a strong case to be made that we haven't hit all-time highs yet, and that we're still in the consolidation zone below the previous one, which means the fireworks are just around the corner. In 2021, after we made a clear break above the previous cycle high of 20K, the price went on to do a 3.5x. If we repeat that, we could see a Bitcoin price of 200 to 300K within the next year. Okay, but you might be asking, why is the price moving now? Well, one of the main reasons is global liquidity levels, or the amount of new money entering the economy, is rising. And as Sam Callahan pointed out in detail with extensive data in a report commissioned by Lynn Alden, Bitcoin is the asset with the highest correlation to global money creation. I'll leave a link to the full report in the description. And who is driving global liquidity levels right now? Why, it's the second largest economy in the world, in China, who just announced they will issue $284 billion worth of sovereign debt this year to help revive their slumping economy. And with the Fed aggressively cutting rates by 50 basis points or 0.5% this month, and many expecting more aggressive rate cuts coming, that global liquidity trend is looking likely to go parabolic once again. As Lynn Alden says, nothing stops this train. On top of this, we are once again seeing Bitcoin ETF inflows steadily increasing, as they hit a 2-month high yesterday. Historically, these flows increase in a stair-step pattern upwards, so we could see this continue as we close out the month. And as if we all weren't bullish enough, I love this take from Vijay Boyapati. The full impact of the Bitcoin ETFs will not be felt until we enter price discovery mode. They are the ultimate means for mass market FOMO. We are close. Vijay is saying what many are forgetting. This will be the first time Bitcoin enters price discovery mode with the existence of the ultimate means for mass market FOMO, these ETFs. Let me repeat. For the first time ever, we will have a massive amount of capital being open to FOMOing into Bitcoin as it surpasses all-time highs with the spot ETF products. Things are about to get absolutely wild. Plus, I would be remiss to not mention a huge bull market indicator that occurred yesterday. Coinbase once again went down as the price was moving up. As many of you know, this is a clear bull market sign as the crypto casino goes down seemingly every single time Bitcoin's price rises more than 10%. And on top of all of this, we are banging on the door of over $1 billion of shorts, sitting at around 66.6 thousand. And as I record this, we banged on the door already once and touched 66.5K. Once these short liquidations are triggered, the price will gap up very quickly. But of course, it's important to remain cool-headed. Bitcoin is an emerging, neutral, non-sovereign reserve asset on an unstoppable path towards becoming global money. But that path will continue to be very volatile. It's important to prepare for the volatility and the human psychology of fear, greed, and panic that ensues. So keep the zoomed out view of the long-term thesis of Bitcoin in the front of your mind. And remember that this entire process will take decades, not months. So don't overextend yourself. Don't borrow money to buy Bitcoin. You're not Michael Saylor. Stay calm, stay humble, and know that every single new Bitcoiner thinks they're late. You're not late. You're just in time.